So I think if I had to choose one to be in right now, now I'm in both right now in the near term, but I would choose Bitcoin to stick with. And if I had to take profits on one, I'd take profits on Ethereum. I mean, 60% move is just an epic move with pretty much no pullback. Yeah, so gold has been really, really interesting to me. Somewhat of a surprise, right? So I've been on the gold bandwagon since basically we pulled back to this downsloping trend line around just below 1800. We find ourselves just above 1700. I didn't honestly think it would go below here. The dollar is partially to blame. The dollar has been so strong, so strong. But what's kind of bothered me in recent days, the dollar has pulled back and gold hasn't caught a bid. Now, on a technical basis, right? So we took out this line. Let me remove it. Basically, on a technical basis, what I'm now following is this line here. This is the epic line around 1680 or so, 1675. To me, that needs to hold. I will be very concerned if we break below it and start to trade below that line. As long as we hold that line, I think that for the most part, you still have this big move up, and then this is all that sideways chop inside of that move. So I think for me, that's the big thing I'm watching right now. Right here is where it started, but then you hit here and here and here, and you're getting close to it over here. So yeah, I mean, it's hit multiple times, which does mean this is weaker. But one of the things in TA that's important to understand is that the longer you stay away from a line, the more it firms up. So I would expect another bounce. So if you look at how long it's been away from this line, from here to here, this line has firmed up a little bit. So it will still be support. But again, if it bounces and then hits it again, my guess is it does break at that point. So I'm really focusing on this next hit, if we get there, as being a really important one where we bounce and we need to start heading back up. Well, the only thing I can make sense of is that the market is looking at peak inflation. And I think that's probably the kicker, right? So we saw PPI numbers 11%. We saw CPI numbers like 9.1 or 9.2%. And people are saying, and this is why, by the way, the market has rallied as well, is that, okay, well, those are massively, ridiculously high inflation numbers, but we've seen copper collapse, nickel collapse, oil collapse, lumber collapse. So it's very apparent that inflation should be coming down now in the next few readings. And if inflation is coming down and people are saying, okay, well, the Fed's going to somehow magically get this inflation back in Pandora's box and get it to 2%, well, then you're right. Then the markets are going to rip and everyone wants risk on, which is why crypto's going up, why stocks are going up. But then why would you hold gold, right? If inflation's going away in the perfect world, which I don't think it will, but that's what the thought process is. I think that's why you're seeing near-term downside in gold. I think what the market will have to do is start to realize that inflation's not really going away. It may come down from 11 or 9% to 5 or 4%, but then it's going to be sticky for the next 10 years at 4 to 5%. And that eventually you're going to see an economy that weakens, and the Fed can't, like everyone's fooling themselves if they think the Fed can all of a sudden print trillions and trillions of dollars again in the next recession to get us out of it with inflation at 4 to 5%. So here's your S&P chart, and basically you've had a nice beautiful bounce today. Really over the last week or so, we're starting to trend up. One of the things to note here is we are coming into a little bit of resistance. This pivot top, we're almost there, right? So we're almost into that level. I think we're going to go higher than that. I think we fill this gap at least. And then you start talking about, you have a downsloping trend line here, which we're actually above short term. So that's a positive. So I do think the stock market has a little bit more upside to it. But again, I'm in a camp where right now this is a down move. This is an inside bar, right? So let me show you something else here. In fact, let me get rid of these lines. So I love parallels. Parallels are one of my favorite technical tools to use. And what I like to do is I like to connect two lows and then bring it up to the high. And this is, so basically what I'm thinking is I think the stock market goes up right here in the near term, which actually almost coincides perfectly with that gap fill. So that's going to be your resistance. Notice it's right around the 4,000 level on the S&P. So again, for me, I'm long the stock market generally. I did take some profits today. I took Netflix off ahead of earnings because I'm a little scared to hold it into earnings. Maybe I'll be wrong, but I made some money on it anyways. I took SC off the table, but I still am holding some stocks, thinking that we still have a little bit more upside here in the near term. Once we get up in this range, though, I may start to short the market. So listen, Netflix, I don't think there's a lot of downside on earnings. Just one of the things that I've learned is that when you don't know for sure and you're up on something, for me, I just prefer to take the money and just wait and see. Like it could go, honestly, I think Netflix, the expectations are so low. I mean, last quarter, they're like, oh, we're going to lose 2 million members or whatever. It's trading at like a 15 PE. That's a great PE for a stock like Netflix. It used to be like 200 back in the day. And I think that for the most part, the odds favor upside, but not enough for me to like feel confident, right? So I think I had like in my position, it was like $500,000, right? So I'm not ready to lose 20% of that if it dumps out. So for me, I just exited. You can see a little bit of resistance here, but ultimately, if it pulls back at all, I'm buying it again. And I think it's got upside. Yeah. So, I mean, right now, again, one of the things that I exited quite a bit of, and let me just go, I'm going to actually look on one of my other screens here. So I still have a little NET here. I'm in from $44.30 with members. So I'm up, very nicely, but basically this gets kind of into this 55 level. I'm going to look to take profits on that one. Zoom, I have a long on Zoom as well. Zoom to me, again, same kind of charts that you're playing. Is what I love about Zoom here is that I love when you go back to 2019, you're basically at levels where you were trading in 2019. So there's just a ton of technical support here. Now, it's not to say that if the market dumps another 20%, Zoom's going to hold up. I mean, let's be honest, everything's going to go down if that happens. But those are some of the plays. Now, some of the other ones I am in, Freeport-McMoRan. All right, Freeport-McMoRan actually having a great day today, up to 4% today. I'm in from 25.62, so it's at 28 and change. And then one of my sleeper plays, which is kind of like your Netflix, is this one here, which is Warner Brothers. I kind of like this one. I like this pattern it's making down here. It's kind of getting up to test this resistance. And remember, Game of Thrones the next Game of Thrones is coming out in August, only about 3 weeks away. And I wouldn't be surprised if they gain a lot of subs going into that for that Game of Thrones debut. And that could give the stock a nice little boost up to this high here, which is around $16.50. So I mean, again, 14 to 16.5, nice little 10, 15% gain possibility. Yeah, oil's bouncing up. I think oil's going to be a short if it gets to about 107 to 111. Somewhere in this vicinity, I'm looking to pull the trigger on a short. You still have a high, a lower high here. You broke this upsloping trend line, so that would be resistance right there. So again, oil moving up, market risk on. People think maybe the economy's not in as much trouble. Maybe inflation's coming down. That's a positive right now for oil. I'm on the other camp. I think this will be a short-term factor that'll lead to another leg down on oil. I still have, by the midterm elections, I think $85 to $75 a barrel. Yeah, I mean, this is a beautiful move. I think you have to marvel the fact that it was at 1,000 6-7 days ago, and it hit a high of 1630. That's a 60% move. It is getting close to major resistance, though. So I am still in this, but if we get close to this 1700 level, I'm going to take profits, and I might even pull a short. I might even pull the trigger on a quick short trade. Granted, very quick. I'm not, I'll look for 200-300 downside kind of thing and just grab that money and run. But that is a major resistance. I would be very surprised if Ethereum blew right through 1700 without any sort of pullback. I think for the most part, Ethereum is running first. We've seen that. Let me bring up Bitcoin in comparison here and put the chart on. But basically, I think that Bitcoin will start to get more momentum in it and probably catch up, or maybe not catch up because Ethereum fell more than Bitcoin, but at least get up to that level. Like if you look at where Ethereum is, it's very, very close to its target of 1700. Bitcoin still has a little ways to go. So if we bring up the Bitcoin chart here, Bitcoin can still technically maybe even get as high as this 28,000 marker. So I think Bitcoin probably takes the lead here out, and you'll see more money flowing in there. So I think if I had to choose one to be in right now I'm in both right now in the near term, but I would choose Bitcoin to stick with. And if I had to take profits on one, I'd take profits on Ethereum. I mean, 60% move is just an epic move with pretty much no pullback.
Oh yeah.
I mean, I still think Polkadot is an interesting one. You still have upside on Polkadot to maybe $8.50. Granted, that's only about 60 cents away, but that one's an interesting one. Cardano. Cardano's trying to break out here. Cardano maybe has the most potential upside if it gets its mojo to this kind of 64, 65 cent level up here. Again, you have a little pivot right here it's dealing with, and a few more pivots around 53, 54 cents. But I would say that one's an interesting one as well. So XRP is coming right up into a little resistance level here. This is going to be a big test for it, right? So if we look at this had a wedge pattern. It broke out of the wedge pattern. Let me just extend that line down so you guys can clearly see. But basically, it's above that level. The next big level is this 38.25 cent level, which is this low right across here. So if it can get through that, then you may have upside to about 45, 46 cents as your next resistance level right up here. Gotcha. But this 38 cents area, that's going to be a big level on this. Right, so again, keep in mind, we're in the summer months. They call it the summer doldrums in the stock market. So I think that's important to recognize. Volume is very light. That tends to favor the upside. I think the fact that you're seeing crypto moving is getting people really excited. They're like, all right, we're back to the good old days of 2021. But again, my guess is by mid-August to late August, you start to see us starting to come back in a little bit. Yeah. And again, keep in mind, we're going to be watching inflation numbers, but more importantly, so inflation, I do think, comes down. It's watching these economic numbers. How fast is the economy slowing? And if you get some really nasty economic numbers, the markets are going to start to freak out about a recession and how bad it could be. And then what can the Fed really do? I mean, what if inflation still only pulled back to 6% and we're in a recession? The Fed can't print money. And that's going to be the ticket to the next leg lower in the markets, in my opinion. Yeah.